Good afternoon, everyone. Thanks for staying. I have a little bit of time to tell you about what we're doing with the business and giving you an overview. And as you know, we strive to be the leading global investment firm and continue to do that. I guess our number one goal is build long-term wealth for investors, clients, individuals, pension funds, sovereign funds around the world. For 125 years, but some of us that are here for the last 30, 40 years, we've been building one of the largest discretionary pools of capital globally, which today on our balance sheet is around $180 billion of capital. There's 135 now in the insurance business and just over $1 trillion in the asset management business. And I'll talk about that a little bit later. Today, the business is in 50 countries. Maybe the most importantly, it's built to be extremely nimble. And it sounds like at the scale that we operate at, you can't be nimble, but we try to always be very nimble to change and evolve our strategy over time. But one thing we're not nimble with is our discipline on how we invest your money. That has led to 19% annualized returns for 30 years, which always doesn't sound like that much, but that's a 27,000% return over 30 years. So that's a pretty amazing return. What that means is that if you look at these returns, the S&P 500 did 11, we did 19. That's 800 basis points more every single year for 30 years. It wasn't every single year, but on average, it was every single year. What's more interesting, most investment strategies get worse as you get bigger. Our 20-year returns are 16, our 10-year returns are 17, our 5-year returns are 22. What it means is the business is maturing and getting better over time, and scale actually is assisting us get better returns. We've achieved that by evolving the business and innovating within the strategies, which I'll touch on. But the evolution, most importantly, is based on two things. One, we always adhere to the value investing tenets that we have within the company. And number two, we try to drive returns, as Anuj said earlier at the BAM presentation, about operating out of our operating capabilities. Over time, our evolution has been, I would say, continuing, but punctuated by some strategic things that we do every once in a while, which we spun our listed entities out in 2008. We started our wealth business in 2020. We spun off BAM in 23, to mention three recent things, which I think were extremely important for the business in the short term, will be very strategic in the long term. Most importantly, as I've said to many of you, I said earlier, and I'll keep saying it, our view is that having access to capital wins. We've always tried to have the best access to capital. That started with institutional investors, is leading to private wealth, has always been with banking relationships, has public market access, and increasingly, the public float that we build within the business will be extremely important to us. Innovation, on the other hand, drives long-term returns for our investors. And there's really just three things, to make it simple, that we do. We try to identify the trends on a big global basis that are going to affect the world that we can participate in. We take those, package them into products for our clients, which then enables us to attract scale capital within each sector. Once we understand an industry, we move fast and we deploy at scale. We're not early, but once we understand it, we move fast and we deploy at scale. 50% of the assets that we operate with today didn't exist as an asset class for investable purposes 15 years ago. That's an evolution. Our leadership position allows us to build differentiated products. And as you can see here, they're in all of our different businesses, and we keep expanding out tangentially within each of the businesses we have to either get other strategies or to get other return profiles for investors that they're looking for. But despite widening out and doing other things, our investment approach has remained consistent and has essentially been a methodical and proven capital allocation process. We operate with a value investing thesis, taking moderate risk, aligning ourselves with our constituents, using our operating skills to squeeze extra returns out of it. And probably most importantly, the culture we have in the organization is extremely important. This has driven 25 years of growth. AUM to $1 trillion, operating income to $19 billion, share price from 2 to 66. So you did that for me last year. What about this year? So where are we now? We're in the midst of three things going on with our business, which are going to foundationally change what we do in the business in a positive. AI is going to drive enormous things within owners of businesses if you get it right, and we believe we can get it right. Second, aging populations are demanding wealth products and are increasingly going to need those products to service their 401ks and other retirement systems. And third, on a more micro level, the real estate recovery is here and it's coming back, and I'll cover each of those. On AI, you've seen our slides. This is a $7 trillion opportunity. We're ideally suited because of our power, our adjacencies, our compute infrastructure, our real estate businesses to participate in this. We have a number of AI factories that we're working on, which is around a $200 billion investment project over the next while, and this is just the beginning, and it's really just the start of what's going on in the world on the infrastructure side. This is a multi-decade opportunity that possibly is the largest business within our company within 10 years. Second, the retirement landscape is undergoing a fundamental shift. Aging populations need savings. DC plans in the US are opening up. Once they open up in the US, they're going to open up globally. And there's a structural need for wealth solutions. The shift is very powerful. In past, our money came from our own balance sheet. It came from our asset management business. Increasingly, it's going to come from individuals and people seeking wealth. Pension plans and sovereign plans, who we've generally sought capital for, is a $22 trillion market. 401ks and wealth is 40. We expect this third source of capital to support a doubling of the inflows into our business across all the different channels, which I would say is $100 billion from institutional funding annually, $50 billion from annuities, $50 billion from wealth. That's about a double of what we've done generally in past. And on real estate, the third change, operating fundamentals are strong. Capital markets are back or coming back. Interest rates are going to start declining or have declined around the world. deal activity is coming back significantly. Where others pulled back, maybe this is most important, we remained active. It's allowed us to continue to grow the business over the last 5 years into many other sectors and many other places. Simply put, our real estate franchise is more dominant now than it's ever been. There are very few survivors like us in the business. Our franchise in real estate is stronger than ever. The next phase of our evolution is also here. Thinking back, our history has been about understanding change and positioning ourselves to respond to that change. We're building our insurance unit to be a fully integrated investment-led insurance organization. Our corporation, our wealth solutions, and our asset management business, and they all of them working together. We've been asked by many, what does insurance-led, investment-led insurance organization mean? And I'll touch on what we mean when we say that, because I think this is extremely important for you to understand. Traditional insurance underwrites insurance and tries to make money by underwriting insurance. It takes the float it gets and it gives it to managers and tries to not lose money. Make profit out of insurance, don't lose money on float, equals profitability of your insurance company. Most insurance companies operate that way. Investment-led insurance turns that upside down. We have extremely strong risk management. We try to achieve returns out of investments. We try not to lose money on insurance. We seek float. We don't seek scale. And it's really saying the opposite of what most insurance companies do. Insurance companies are good at what they do. They underwrite insurance. They're trying to make profits. Investment-led insurance is the exact opposite of that. And that's what we're trying to do with the business. For us, we're led by investment opportunities, not inflows. Our capital gives us a competitive advantage. Our core competencies suit insurance liabilities. Many of the things we do are long-tailed assets which match long-term liabilities. Our long duration investing matches that float, and our risk mitigation and management skills will enhance every insurance company that we participate in. Our model is designed to maximize capital efficiency and enhance returns without taking any more risk on the asset management side. In fact, probably we will take less risk. Bringing it together, investing in operating capabilities with wealth flows are a significant portion of the next future of Brookfield Corporation. What we're trying to do, and Sachin will explain this later, is mix liquid assets and be very liquid within our insurance businesses, crossed with heavy allocations to real asset investing in both debt and equity. The combination of those two are very attractive on a regulation and regulator basis and on a return basis, and to earn 15% plus on the equity that we have in the business. When we spun out BAM, we told you we would find a business that was synergistic, that could work with all of the other things we had, that we would build within Brookfield Corporation, that would deliver high-quality earnings, that would enhance the efficiency of the balance sheet, and that would support our other businesses we have in the company. Our Wealth Solutions business, we think, is that. It has $26 billion of capital today. It has $135 billion of insurance assets. It's gone from 0 to $1.7 billion of distributable earnings, and Sachin will take you through where we're going in the future. With further integration of our capital into the insurance business, we expect to use that capital to grow the business to possibly $600 billion and maybe more. It will be done prudently. It will be done to ensure we earn attractive returns on the capital, but it will also drive the returns of Brookfield Asset Management as we allocate capital to them as a manager of our asset base. We will build this business with the same discipline that we've always built our businesses and think that we can be successful at doing this. As always, and this is paramount, we remain focused on delivering 15% plus returns for shareholders. I think it's easier today than it was 25 years ago because of the scale and the business that we have within Brookfield Corporation. So welcome to the next chapter of Brookfield, and I'll turn you over to Nick Goodman, who will take you through our financial results.